This is great for people that watch charts because this is a textbook key reversal day.
Yesterday.
Makes a new high.
Yesterday, right?
It opens, it gaps higher at the open, makes a new high, then all of a sudden does a U-turn and closes below the previous day's low.
And it's been verified now. Is that what's going on today?
Yes, and yesterday we had huge volume in the stock.
Can you see down today? Okay, down 1%. It was down 2% earlier,
Right.
so.
Yeah, we had huge volume in the stock, means that a lot of people were looking at this pattern. All it means is that it doesn't mean that the trend is over, but now you just have to recognize that maybe the stock could go down. There's a big warning
I mean, the fact of the matter, Apple stock has just been, I think someone described it as parabolic. I mean, it has just been going up relentlessly, and the company's doing well. I mean, let's not kid ourselves. But at some point, it has to go down. Right?
And there has to be a little bit of something like this before a bigger thing can happen.
Yeah.
So this doesn't mean a big thing's going to happen, like a big trend, but it does warn of it. Warn that's there's going to be a short-term pause here. This pattern has come up a couple times before, and it's
with
worked.
Apple,
right? And it has worked. So
it has worked, but then resumed its gradual climb upward.
Yes.
And now it's been parabolically upward.
Right. I think the two I saw in 2010, one caused a 6% drop, another caused a 10% drop. So it did go back up again, but at least
and those probably mirrored broader market declines as well at that time.
Right. Or after an earnings number or something like that. So, I mean, it does warn that something could happen here.
Yeah, I mean, that's a good question. How much does this tie into what's going on in the markets right now? The Dow's up today, but it's been a little weaker of late, the last week or so. It's really been kind of rough. You see that's the 5-year chart we're looking at there. And I might see one of those couple dips you were talking about there, Tommy. I mean,
there they are,
is Apple completely disassociated from the broader market, or can it actually unbelievably be affected by what goes on in the rest of the world?
It has caused the S&P and the NASDAQ, indexes that do carry the Apple to make new highs recently, whereas the Dow Transports, the Russell 2000, they don't have Apple in it, and they've actually been trending slightly lower over the last couple of weeks. So we are starting to see signs that, if it wasn't for Apple's big rally, that the stock market actually is showing signs of weakness. So if Apple doesn't go up, I mean, that overall weakness, it could start carry over into the NASDAQ and actually have a bigger effect on the broad market.
That's interesting.
But so far, it is able to disassociate itself from those broader market moves.
It has been so far, yes. And it's actually propelled some of the other indexes that we see as important.
I mean, do the charts, you look at the tea leaves, you read the charts, do the charts point in any direction? Trying to lead you there a little bit, Tommy?
That's the thing. You start looking at the small caps and the transports, and then they're showing signs of a weakness right here. You have to start, at least taking a breather here and let the market play itself out before you start getting back involved again.
Yeah. So you think maybe a near-term top?
Yes.
So for this key reversal to be reversed, you'd have to close above 526.29 is what you wrote today.
Right. That was the all-time high yesterday, and as long as it can hover just below that level, it can just stick there, and that shows that that bears are still involved. But once they close above that, they give up, and we're backed up to new highs again.